the most dangerous conditions that you can get trapped in as a trending trader are seek and destroy conditions. Now, the name itself already tells you a lot, right? Seek and destroy. It's referring to constantly seeking liquidity, taking people out of the market. Both sides of the market are getting taken out. Short traders and long traders are both getting taken out. In this episode, I exactly want to go over how we can spot those conditions beforehand. And then in the next episode, I exactly want to go over turtle soups, and I want to go over how we can potentially capitalize on these conditions. Because as a trader, I believe you excel in either seek and destroy conditions or trending conditions. It's not a one-fits-all type thing. Here we are on Australian dollar, US dollar. To show you my receipt that it actually is possible to spot seek and destroy conditions beforehand. In the weekly forecast, heading into this condition, this seek and destroy conditions, this consolidation that you're seeing right there. In the free weekly forecast, we already mentioned it. And how we were able to spot it before it even happened was, there are a few conditions. First off, we took sell side liquidity. So we took a major sell side liquidity right there. The reason I say major sell side liquidity, can you notice what this is? This is already a big consolidation itself. We take out the low of the consolidation right there. Then afterwards, we immediately target the opposing liquidity at the highs right there. So we sweep the lows and then head for the highs in one big expansion higher right there. In that moment, what has happened? We have taken both sides of the market. Price now needs to create and generate new liquidity in the market. What then happens is, if you draw your Fibonacci on that low and that high right there, so just the range where the expansion happened, the most recent range, like a magnet, price will refer back to the 50% of that most recent range, which is that is equilibrium. That is where price is in balance. It's not in premium, it's not a discount, it's at equilibrium, and price will likely consolidate there. Now, this is not guaranteed, and the reason it's not guaranteed, it is guaranteed once PD arrays stop following through. PD arrays not following through is the most important aspect to knowing when we have seek and destroy conditions. Because taking the sell side liquidity, taking the buy side liquidity, getting back to 50% of the range, that's nice and all. But to actually confirm seek and destroy conditions, the last step before we actually can confirm seek and destroy conditions, that is when PD arrays stop following through. What do I mean by that? When we zoom in on this price action right there, we have that fair value gap that we are trading into. And what is that fair value gap doing right there? That premium array is pushing price lower. We have this fair value gap right there. What is that fair value gap doing? That premium array again is pushing price lower. Then right there, it is important, first thing to note, that we are at 50%. So it's already getting tricky. Now the next thing is, we have this fair value gap and that order block sitting right there. Two premium arrays. What happens right there? We are not rejecting lower anymore. Can you see that? And then we trade to the lows. We don't take out the lows. We immediately continue higher. It is in seek and destroy conditions right there. And why? Because the PD arrays are not following through anymore. The discount arrays are not following through. The premium arrays are not following through. And the beautiful thing you can notice on a daily time frame right there, can you see all the wicks? There's no fair value gap anywhere. That is exactly what we would want to see for seek and destroy conditions. Or if you're a trend trader, of course, you don't want to see this and you would love for it to never happen. But unfortunately, it will happen. Sooner or later, you will experience these conditions. All right, here we are on the dollar. And right here, we again have seek and destroy conditions. There, we take out a major liquidity pool. What does price do? Like a magnet, again, it refers back to 50% of that most recent range. And then to confirm the seek and destroy conditions, what happens? The PD arrays are not following through anymore. So we have this sweep right there. We have this fair value gap that is not continuing lower. No fair value gaps lower anymore. No fair value gaps higher either. We just have wiki price action. And once you notice that, the price is failing to follow through. And you could have already noticed that very early on. If you go back to an old live stream, I believe I mentioned it on a Tuesday or a Wednesday right there, that I said, all right, we are in seek and destroy conditions and you need to be very careful. And what I saw at that time, so here we are zoomed in on the 4 hour, what I saw at that time was, if price wants to continue lower here, then this fair value gap should likely get respected and follow through, right? So once this happens, we come into that fair value gap right there and we fail to follow through. And then we do come into an order block right there, but there's no fair value gap going higher either. Right there, PD rays are not following through. So you want to either avoid it or this is your time to shine. And this is exactly where you want to get involved. Now, how can we know that these seek and destroy conditions are over and that as trend traders, we can finally trade again? And that as seek and destroy condition traders, we might want to get out of the market again. When price displaces out of the range, out of the consolidation, that is exactly when we can look to trade it again. What do I mean by that? First off, what is the consolidation? The consolidation, the major consolidation is this right here, right? It's this whole gray area. That is your consolidation. Then the next part is, what is displacement? A displacement is a fair value gap. Now, you ideally want something on the higher time frame to create a fair value gap, not just a 1 minute fair value gap. Of course, that is not significant enough. Right there, we have a fair value gap down, but does it displace out of the consolidation? No, it does not. So right there, we have a new fair value gap. All right, nice. Then here we have a new fair value gap and it displaced out of the consolidation. That is exactly when you can look to trade again. And that is the first sign when seek and destroy conditions are over. This usually happens during NFP, CPI or FOMC. Based on the news again, that is when price has the volatility to push out of a consolidation, to push out of the seek and destroy conditions. Now, how can we confirm that price is truly out of the seek and destroy conditions? Again, the first sign is, of course, that we are displacing out of the consolidation. The second sign is PD rays are finally following through. So discount rays are finally following through again. And that is exactly when we have trending conditions again. And then I'll see you at the next A to Z guide episode on Friday, where we are going to go over how we can capitalize on seek and destroy conditions using turtle soups, but also going over turtle soups that can be used in trending conditions. So a full turtle soup lecture. All right, now if you want more on low probability conditions and high probability conditions, then I would highly advise to check out this video. And then I'll see you at the next A to Z guide on Friday. All right, perfect. Thank you.